Amazon reported quarterly financial results after the stock markets closed on Thursday, July 31st, 2025. Those results, even though they were better than expectations, have sent the stock price down more than 7% in the aftermarket hours. So Amazon reported net sales increased 13% to 168 billion. Now that was above the higher end of the guidance that management informed investors when they provided guidance about 3 months ago. And I was pleasantly surprised by this figure because since the company announced earnings 3 months ago, we've had a lot of volatility in the market, especially as it relates to trade policy. And of course, Amazon sources a significant percentage of the products that are sold on its website from outside the United States. So tariffs were going to be a big deal for Amazon. But despite those geopolitical headwinds and the increase in tariffs, the company's net sales increased by 13%. Now, I attribute this partly to the fact that tariffs were also increased for companies like Temu and Shein, which sell lower priced items. And I saw them as big competitors to Amazon because a lot of the products I saw on Temu, let's say 6 months ago, were priced well below what Amazon was pricing those same products for. For instance, let's say you're buying like an aftermarket Apple pen or Apple pencil to use on your iPad, right? Those Apple pens, pencils, whatever you want to call them, I bought one on Amazon for about $20, and then I saw another one. I saw one, a few months later on Temu for $9 or $8. Now, the next big thing, Amazon Web Services increased sales by 17.5% year over year. That was not much of an increase from the previous quarter in terms of the revenue growth rate. And that was much lower than what Alphabet and Microsoft reported in their cloud segments, to which Microsoft reported revenue yesterday, Alphabet late last week. They both demonstrated revenue growth of roughly 30% or more in their cloud segment. So investors were hoping for better from Amazon's web services segment. This is Amazon's most profitable segment by far, operating margins usually north of 30%. Operating income overall increased to 19.2 billion, again above the higher end of what management was forecasting for the current quarter, compared with 14.7 billion in the same quarter last year.
Click the link below to watch the full video.